Good morning and welcome to this weekly market update. Today, Wednesday the 14th of March. What I'll be doing today, as usual, is going through EURUSD, pound dollar, euro, pound and gold charts. Looking over the weekly, well, briefly the weekly charts of each, but mainly the daily and the 4-hour. Daily being the most important chart, as it's a kind of weekly, kind of 2-week sort of outlook. For any of you new watching, we have 3 moving averages on each chart. Red one is the 55, purple is 100, and gold 200. So on a weekly chart, this is 55 week moving average, 100 week moving average, and 200 week moving average. Okay, let's start with Euro USD. What I'll do, because as it's kind of weekly outlook over the next few days, there's no point in going too much into detail or the weekly chart. What I'll mainly be focusing on is the last week's weekly candle. And as you can see, last week we did have a bearish candle which followed on from the previous week's candle. Okay, so there we go. This is kind of inverted hammer, but as it's a continuation pattern, we'd expect to have further sell-off. And as you can see up here, the 100 week moving average is capping quite nicely, so a lot of the weekly chart players will be looking for further sell-off into these next few weeks. But the daily chart is much more interest for me personally, because I think it's much more detailed, and also there's a key Fibonacci level which I want to show you. Okay, so we are now on the weekly chart. The reason why I said there's a key level on this chart is because here it is. On the daily, you have this key 50% Fibonacci retracement zone at around 130.54, which has acted as very, very good previous support in the past, as you can see, which I'll highlight here. It's held very well there and very well there, and it's now testing it around this zone now. And also we have this 55-day moving average, which is also kind of confluence zone. So very, very key day to day, in fact, and this is why I think it's a good time to do the video today, because it's around this key level now. So all the buyers are coming, well, a lot of key long-term players will be buying at this level. This level is key for the week, and also if we flip it back to the weekly chart, the weekly close is very, very important. As you can see around this sort of level here, we had spikes below, then it's closed well above, so the weekly close is crucial, and also the daily close today is very, very important. Yesterday's day, it did kind of pierce this level a little bit, but then we had a nice, well, not a nice close, but at least it closed above it. But today is very, very important because we've had quite a decent spike below, so if, let's say, if it bounces back up and forms a nice hammer, then that'll be a key reversal candle, and we could then see the next few days and next week have a sharp rise back up. In terms, let's say we do get a pop over the next, well, today or tomorrow, then the first main resistance zone will be this 100-day moving average, which stands at the minute at around 132.40. And if we get a break above that, then it will be that 0.0% level at the 134.85 level. Okay, yes, that's about it really for the EURUSD. That's all I'd really be focusing on, is this key 50% level. If anyone new watching, you'll notice that I've got the 23.6 or the 38.2 level on my charts. That's because I personally prefer the 50 or 61, 50 and 61.8 as the first key supports. That's no recommendation, it's just a personal preference. I personally like it because it thinks that it gives it a nice healthy retracement. I personally think these levels are stronger, but the 23.6 and 38.2 are perfectly valid Fibonacci levels, so don't make me put you off those levels. Okay, let's have a little look at the daily chart now, on not the daily, the weekly chart on cable. Okay, so in terms of cable, we've spoken about this for the last sort of few weeks now. This key trend line support's been holding very, very nicely. We had a nice bounce off of that level. We also have another sort of trend line which you can stick on here, so we're kind of getting a nice sort of triangular pattern there. In terms of last week's weekly candle, what did we have? We had a very bearish candle here. Okay, we had a bearish close below this 100 week moving average, which I've been speaking about for the last sort of few weeks, months now. So we got to close below that. So in terms of the weekly perspective, you would say that maybe we could get a continued sell-off and come down to this trendline support. But very similar to EURUSD, I'll flip it to the daily now. We also have another bounce off of this 50% Fibonacci retracement zone at around 156.09. So we had a nice bounce off that on Monday. It pierced it, and then we broke, then we came back above and closed above, and then yesterday's candle was nice and bullish as well. We've also closed above the key 100-day moving average, so around a kind of sticky point at the minute, but we've closed above the 100, so you'd have to say that the bias is towards the upside this week, and a lot of people will be looking at resistance at this 200-day moving average at around 158.71. So in terms of the weekly outlook, you have to say that it's just the bias is towards the upside. So in terms of resistance, that's all I'll be focusing on really, is that 200-day moving average. In fact, what was on the weekly? Yeah, in the weekly, resistance will be this 100-week moving average. So very, very similar to euro-dollar really. Very, very similar charts. All about this 50% level, and then if we do get a pop, which I personally think we will, not that I'm giving any trading calls or recommendations, then those would be the resistance zones that I'll be looking out for on my chart. Okay, let's have a look at euro pound now. Let's flip it to the weekly. So what do we have on this weekly chart? We have a very long-term support line there. As you can see, it's been holding since 2006, so massive trendline support there. And let's flip it to, well, let's go back to the weekly. In terms of resistance zones, in terms of moving averages, we do have this nice little cluster up here. So if we do get a nice pop up from this trendline support, if it continues to hold, then that will be the first key resistance zone on the weekly chart, the 100-week moving average, which is at around 0.8565 currently. Okay, let's flip it. And also, sorry, the last week's candle was just a kind of general bullish candle really, not a massively bullish candle. It didn't engulf the previous one, just a general small bullish one, but it's continuing to hold this trend line. So you have to say, in terms of weekly chart, bias is still towards the upside, but it's all about this weekly candle close. If it closes below this level, then you have to say we could see a significant sell-off, okay? But in terms of this trend line, it's still holding, so you have to be looking at the upside really. In terms of the daily chart, what do we have here? Very, very similar to the weekly, but it's just pretty much a zoomed in version. Well, yesterday we had quite a big sell-off actually in terms of euro pound, and we closed below this 55-day moving average, so the pressure is now on this trend line. We did spike a little bit below this trend line, but we've now pushed above, so the daily candle close will be very, very key this week. Sorry, the daily candle close will be very important today, and also the weekly candle. But let's say in terms of this daily candle, if we get further upside today and it posts a nice bullish hammer, then the 55-day moving average would be the first key resistance zone that I'll be looking at for, and then the 100-day. So if we get a nice close above this 55-day moving average, and the 100-day will be the next key resistance zone, which stands at around 0.8430. Okay, so that's it in terms of the main kind of forex pairs. If there are any other pairs that you want to have a look at in the future, then feel free to comment on our YouTube, because I'll be posting this on the YouTube site. So if there's any sort of feedback you want, then let me have a look. But I thought I'd just go through the main sort of forex pairs that most of you guys will be looking out for. Okay, so I don't know, if you want to look at something like Aussie dollar or dollar Swiss or Kiwi or Euro Swiss, then feel free to post underneath the video on YouTube. Right, and let's have a look at the gold chart. Gold's very, very interesting. As spoken about many, many times before, we've still got this long-term support line on the weekly. We spoke about that amazing bounce off of that confluence zone, the 55-week moving average, and the trendline support. We've now had a nice bounce above that. What did we have last week? A very kind of bullish hammer last week with this big kind of dragonfly doji. You can see that last week. So we had a sell-off, and bulls pushed that price back up and made that candle close, the candle body close above its opening price. So quite a bullish sort of reversal candle there. But you can see currently this week the pressure is on, and it looks like we want to come down to this kind of 55-week moving average and trend line support. So very interesting in terms of the weekly, but let's say if you just wanted to predict this week based on last week's candle, then you have to say that the bias is towards the upside. So very, very interesting next few days for the weekly candlestick players. Okay, let's flip it to the daily now. So I'll just move this trend line down a bit so it's below the daily candles. As you can see around here, we have this kind of cluster of moving averages here, very, very sort of sticky area. It looks like it's looking for direction, and in fact yesterday we got a daily candle close below this cluster of moving averages, and more importantly the 200-day moving average. So the pressure looks like it's on for the bulls, and it looks like price wants to come down at around this area. In terms of Fibonacci retracement zones, what do we have around here? Surprise, surprise, it's testing this key 50% area. I spoke about previously at 38.2, which did hold, but this is a prime example why I don't really like using the 38.2. So that was around that area there, and you can see it bounced up a bit, but then it's just come back down. This is a much key level for me personally. and if today is all about the daily candlestick close, so very, very similar sort of correlation we're getting with the euro-dollar cable pardon me, and gold, all around this all around a key 50% Fibonacci retracement zone at the minute. So the daily candlestick close is absolutely crucial, and also the candles that close around this 200 days. So very, very key level on gold here. If the buyers still want to keep this gold pushing up, then it's all about this candlestick close for me here on the 50%. If we get a close below, then it looks like this trend line support will want to get tested, but of course you'll get through the 61.8. So between the 50% and 61.8 is kind of good. Will be a serious sort of support zone that a lot of people will be looking at. They'll be looking at for direction in terms of where the candlesticks will be closing. Okay, so yeah, that's all in terms of the technicals. What I'll do now is have a little look at the calendar and see what we've got for the rest of the week coming up in terms of news. So here's today's. What do we have? We've had some data out of UK. We had weak UK data, which has been pressing on cable. Came out of 7.2 thousand versus 6.5 forecast. We had some Eurozone CPI data as well. It's come out as expected. In fact, core CPI went down. It was expected at 1.6%. Came out 1.5%. In terms of big news. 2 PM UK time, we have Fed Chairman Ben Bernanke speaking. Will he be hinting at any QE or will he or interest rates? Because yesterday we had the FOMC minutes out yesterday. No sort of anticipation any QE printing or interest rate increases, but the dollar did initially get strong yesterday, so that'll be very interesting at 2 PM. Tomorrow, what do we have? In terms of the US, we have key US PPI month-on-month numbers forecast at 0.5%, previously 0.1%. We have the weekly jobless claims forecast at 357,000, previous was 362,000. And at 1 PM tomorrow, we have the US tick long-term purchases forecast 29.3 billion, previously was 17.9 billion. And at 2 PM, we have the US Philly Fed Manufacturing Index forecast at 11.1, previously 10.2. And on Friday, what do we have? We have at 12:30 US core CPI forecast at 0.2%, previously was 0.2% as well, and the normal CPI data forecast 0.4%, and previously 0.2%. So it's kind of expecting some more inflation out of the US, which will also we may get a hint out today of what they really think those CPI numbers will be. So it'll be very key to see what Ben Bernanke will be saying today. And at 1:50 to finish off the week, at 1:55 PM on Friday, with the US preliminary University of Michigan consumer sentiment forecast at 75.7, previously 75.3. That's been revised upwards actually from 72.5. So very, very interesting week this week. So yeah, keep an eye out on that, and I'll see you next Monday. Have a great week.